you kind of get into the nuts and bolts of valuation of a business, but anything you can do to make your revenue base more sticky and recurring is always a great thing. And sometimes that requires a change in the business model to do so. Just for sake of example, getting long-term contracts in place with certain customers to create a more sticky revenue stream ahead of a potential transaction. So, all those are in the theme of it takes, I would say, years, 2 to 3 years to really create change within the business that results in a better result in the sale event itself.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedlack, and I'm super glad that you're here with us today because I have my most amazing guest, Tristan. Tristan, thank you so much for being here with us today.
Thank you, Michelle. Thanks for having me. It's great to be here.
Awesome. So give everybody the highlight of who you are and what you do for business.
Yeah, Tristan Tahmaseb. I'm a director at ButcherJoseph. ButcherJoseph is a boutique investment bank focused on the middle market. So we work with privately held businesses that are primarily founder and family owned, meaning, they're the business owner that started the business continues to own it, and we typically step in and are involved when they are going through some form of an ownership transition event, meaning they're at the point where there's time to do something with the business in terms of a sale event for any number of reasons. Estate planning, there's not a next generation in the business, the market timing is right. We step in and help them navigate through that transaction and advise on the event. We do both, I'll call third-party sale transactions and ESOP transactions, employee stock ownership plan transactions, which is an alternative to, I would call it, a more traditional third-party sale. We work with all types of businesses, and in my book, it's manufacturing, industrial, software developers, you name it. The common theme is founder-owned. I sit in St. Louis. We've got presence in Chicago, East Coast, South Florida. So happy to get on today here with you, Michelle, and help educate your audience.
Awesome. So that gives us a whole ton of stuff to talk about, and I'm super excited to get into it. Let's back up the bus a little bit and tell me how you got into investment banking as your thing.
Yeah, I would love to say I had a plan from 5 years old to get into this job, but really I found my way into it as I was learning about finance. Knew I wanted to go somewhere in the finance direction, which is a pretty wide spectrum. But the more I networked, spoke with mentors, they had suggested going into banking as an opportunity to learn. I've been in it for 8 years now. I'm still learning every day, which is why I would say I'm probably still within this job. And it is truly a great platform to see all facets of finance, understand the key drivers of businesses. And within the niche that I found myself in at ButcherJoseph, working with founder owners as really I've really connected to that, gone on to that, and hearing their stories, helping them find the right home for their businesses when they go through a sale event.
Absolutely. Well, I would venture to say even Warren Buffett is still learning. That's part of the fascination of the industry. One is that finances, or business, I should say, is constantly changing. The
Mhm.
fundamentals remain the same, but that's the fun part about business. And two, dealing with the families is always, you're always going to have an interesting twists and turns in there. So while we're on that topic, do you have a favorite aspect of your job position that you particularly love?
Yeah, I mean, I would say at this point that the relationship with our clients is um, truly, I think, the special part of the job. I mean, we're working with founders that, started their business 10, 20, 30, 40 years ago, or even families. That's, it's third generation business. It's such a deep part of their lives. And for many of them, they only go through a sale transaction once. And we get to earn the trust to be able to take them through that transaction, and the bond and relationship we develop during that process is unique. And I think certainly the favorite aspect of the job for me.
Nice. I love it. So let's look at, because you had a whole string of reasons why somebody might sell. And I want to get into some of those. But does the reason come before they decide to look at you? Do they go, "Oh, I think we need to sell and here's why," or do they go, or is there a conversation that happens and then they go, "Oh, well, maybe we should sell then." How does that happen for them?
I would say with my clients in particular, so we're talking about the middle market in the U.S. and we're typically talking, a business owner or a family or a set of stakeholders that are, typically 50, 60, 70 years old, and it's typically a a a life reason why a sale transaction needs to occur, and that's usually the impetus for a conversation with us. The owner or the ownership group looks up and says, okay, it's time to do something with this business for, again, a number of reasons. That's when the conversation usually gets initiated. I mean, there are instances where we're talking with folks and, hey, do you realize the value of your business? What's possible in a potential sale transaction, and that turns the light bulb on for a few folks. But by far the majority of the time, it's a event has happened or they've decided a transaction needs to occur, and that's when the conversation starts.
Awesome. So when somebody's looking at their business, is there a group of people that tend to think, "Oh, I can't sell this business. It's not sellable." And you're going, "No, this is a fantastic business to sell. We need to talk." So is there any kind of mistakes that somebody makes before they get into looking at you as a potential partner?
No, I mean, usually I would say it's the other way around. That the founder, they really love their business, and as they
Mm.
should. I mean, they've invested a significant part, or if not most of their lives, into building the business itself. There are things that, I think looking back, could folks do if you have a 3, 5 year runway ahead of a transaction to maximize the result? Sure, yeah, and that's with every business. And you're usually not left with the perfect 5 year plan before it's time to sell to your one of your last questions. It's an event that occurs that leads to the conversation. It's typically not the perfect 3, 4, 5 year plan to then sell your business itself.
So let's talk about that 3 to 5 years as the ideal. Why is that ideal, and what are people typically not thinking about that they should be thinking about?
Yeah, I mean, I would say that there's not a magic number in terms of the time to advance plan for a potential transaction, but it gives you enough time to make meaningful change in the business if it needs it. And emphasis on the if there. Whether that's setting in place and developing the right leadership to take the next step within the business. So, in my experience, a founder who's typically acting as a CEO hasn't hired to replace themselves quite yet. And so, whether there's a lieutenant in the business that, you can start to develop and give more responsibility to, or develop a broader set of management team, depending on the size of the business, that can be a pretty important factor. And with enough lead time, and that's usually years, not months or weeks to make that happen. That's one big one. Another is, you kind of get into the nuts and bolts of valuation of a business, but anything you can do to make your revenue base more sticky and recurring is always a great thing. And sometimes that requires a change in the business model to do so. Just for sake of example, getting long-term contracts in place with certain customers to create a more sticky revenue stream ahead of a potential transaction. So, all those are in the theme of it takes, I would say, years, 2 to 3 years to really create change within the business that results in a better result in the sale event itself.
Thanks. Well, two questions on that. So we'll start with the CEO kind of replacement. Now,
Mhm.
I'm assuming that a lot of CEOs are going to think, "Oh, if somebody buys my business, they're going to want to be the new CEO." So, kind of how would that transition work if they're mentoring somebody to take over for them? If the new owners are going, "No, I think we'll become that person." Like they don't want to make one of their best men redundant, person
Mhm.
redundant. How do they kind of, what's the mindset that they need to have in regards to that? Are the new owners not necessarily even wanting to be the CEO? They're just looking for it as a lucrative ownership asset, or how does that go?
Yeah, I mean, I think some of that gets into the transaction type itself. I had mentioned a sale to a third party, and that's a sale to a private equity group or a sale to a strategic versus I'll call it in quotes here for folks listening in, but a sale to an ESOP, which is more of an inside sale, where there's not, say, an active investor involved, and it's more of a continuity transaction. And in those situations, it's really up to the current management team, owner, CEO, to develop that next generation and crop of leaders. But even in a third party sale, particularly on the sponsor side, sponsors are looking for management teams to bet on, and there are certain sponsors out there that, yeah, their playbook is to bring in a new manager, a CEO, or a broader suite. But in many situations, they want to find a really strong management team to bet on, and yeah, they're going to come to the table, and their proposition is to bring value as well, but in different ways than just replacing management itself.
Right. So when it comes to putting contracts in place, I know a lot
Mhm.
of companies think, oh, they just come back to us. We just have client loyalty,
Mhm.
or, we can't get demand that they have a contract with us because there's only so many people in the industry and they change around. So, one, what is part of the reasons that you've seen in the past where people don't have contracts in place? And do you come in and help them potentially to set up a strategy for being able to do that when they didn't think it was possible?
Yeah, and I mean some of it is business model. I mean, if you're selling a single product, there's not an opportunity to put into place those longer term contracts. But in many of the businesses, particularly the older economy, real founder owned business, founder and managed businesses, it's relationship that's built the business itself, and there's a lot of good that comes with that. The business was built off of it. But when a new owner steps in, they're going to need something a little more comfortable than just that's the way we've always done business, and have built the relationship in many instances. And they would like to see is more contractual
Yeah, no doubt.
obligations involved in those revenue streams. And so again, it's not a perfect science. Not all businesses are made for that, but just an example of one area within the many that you could look at within a business to improve potentially the result over a several year period.
Nice. So when somebody's working with you or thinking about working with you, is
Mhm.
there kind of a timeline that they want to be looking at? Is there, do you come in for kind of 3 months and do your thing and then let them do their thing and come back? Or are you kind of constantly there for them as they need them? How does that relationship work when you're working with someone?
Yeah, I mean, look, if we're being brought in for a transaction, I want to do my job efficiently. I don't, I don't want to be around the table for forever, which means, that the process has probably been prolonged. But I do have longstanding consulting clients where we're supporting them in more of a corporate finance function, understanding what are the drivers of value. And in those instances, we are around the table for longer, but in a I would call the typical sale transaction event. We're coming in for a 6 to 9 month process. Some of that is prepping the business for the sale process itself, and then the execution of the sale transaction itself up and through closing. And there's a lot that can influence it, but 6 to 9 months for a middle market transaction, whether that's a sale to private equity or sale to ESOP, is fairly standard.
Nice. So when somebody's looking at those investment drivers, I know typically when somebody's running their business, they're just thinking, how much profit do I get? How much longevity do I have? Can I keep running this tomorrow kind of thing? So what kind of aspects are they looking or should they be looking at as far as those investment drivers go that they may not
Mhm.
have considered before?
Mm. We talked about one that's being, I'll call the key man or woman risk with the
Hmm.
business itself, and making sure you're thinking of the next generation to, whether that's whoever's the owner of relationships, and from a sales perspective, client perspective, but other things. I mean, general diversification with the business itself. That's in clients, so you don't want to be too concentrated in any single client. From a industry perspective, if you're selling into multiple industries or have the ability to do so, you're going to make sure you're well diversified there. And with investors and thinking of those that would potentially buy the business, what industries are you participating in, and is there a way to shift, whether it's a subsegment or a different industry itself, that has longer term tailwinds for the business over the next 5, 10 plus years. And those are just a few of them. That the evaluation is always a mosaic of factors, looking at the cash flows, the risk of those cash flows, what's the outlook, um, and getting to evaluation of the business.
Nice. So are there any things, if somebody's going listening to this and they're going, okay, we need to meet, is there anything that they can put in place or gather for you that would make that initial meeting more productive for both sides?
Yeah, I mean, for me, when I'm meeting a business owner, there's a few pieces of information just to get to do the initial analysis, and we do that with all of our clients. And well, what I refer to as a feasibility analysis, and that's do you have a budget or a longer term projection set? Some of our clients they had a formal process to the budgeting process and a 3 to 5 year projection process that they do annually, which is great. We have other clients that we just do a budget, or hey, we really just look out up to 6 to 12 months, and we don't have a formal budgeting process. Anything regards to that outlook is helpful. A historical look at information, that being the cash flows of the business, so an income statement and what their historical capex has been, and then a quick kind of overview on their customers at a high level. I mean, with those few key pieces of information, that's how we start a conversation, at least from a math perspective on getting a range of value.
Nice. And is there anything in there that would potentially predict whether or not they're going to go to a investment company or if they're going to go to a private seller? Like, is there anything that would differentiate those two decisions?
In terms of buyer type is,
Yeah.
yeah. Um, that really gets to, I won't say this with every case, but less the financials of the business and more the objectives of the business owner itself. What are they looking for in a transaction? And that's usually where the conversation starts. The
Mhm.
way I and my firm approaches these conversations is we're not there to dictate any specific type of transaction to our clients. We're able to execute on a sale to a private equity group. We're able to execute on a sale to a strategic. We're able to execute on a sale to an ESOP, an employee stock ownership plan. And it's really a listening exercise. And it's what are the objectives? And that usually happens in a conversation. Some they have formal documents that articulate what they're looking for. Others, hey, this is the first time I've really thought about it. I knew something needed to happen, but I haven't really put this on paper yet. And can be a healthy exercise itself just to do so. And after listening, we take a consultative approach and say, okay, I think this is what this path looks like, and this is what this path looks like. This path we think satisfies your list of objectives in the maximum way. Here's what we would recommend, and that's typically how that initial set of conversation goes, and in a business owner looking to determine which path they're looking to go down from a sale event perspective.
Beautiful. Well, I love to hear about a Cinderella story of one of your clients, but before we do that, we're going to take a quick break.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.
So I am super excited to hear about a Cinderella story of one of your clients.
Sure. Yeah. One that comes to mind. It's hard to think. It's been a few years now. Related to, I guess, the still a punchline on it, related to the COVID-19 lockdown and pandemic. But we were advising a really nice family-owned business. They were in the packaging space, servicing the movie theater space and retail. And we got started on a transaction process. We were well into it, late 2019, early 2020, and lo and behold, as we're moving to sign the definitive agreement related to the transaction, the news kind of all starts to shake out in February and March. And at that time, no one knew what the outlook was going to be for the whole world, much less the business itself. And so we went pause on the transaction at that point in time. And the business, like many others, they took their scrapes and bruises in operating in that environment. They persevered through it, and it ended up being I would say a blessing in disguise looking back for the business, and that the punches they took in the lockdown, as did a lot of businesses at the time, they grew much stronger because of it, and it caused them to change their business model in a way that as the the COVID environment moved to the rear view in 21 and 22, the business grew much stronger out of it. Grew to be a much larger business than at the time of the transaction, and ultimately we got that transaction done on greater terms in 23. And so that's one where it was we talked about what our typical process takes. It's usually a 6 to 9 month process. That was a 3 to 4 year process, and hats off to my client. They're great people, great business, great set of employees, and they grew much stronger because of it. I'm happy we got the transaction done for them ultimately. That's probably the one that jumps out to me.
Nice. Well, and I love two things. One is that when chaos hits, it's not necessarily a bad thing because you're right. For a lot of people, they're looking at processes that they hadn't looked at before and went, "Oh, that's
Hmm.
just the way we've always done it." It's like, no, there's got to be a better way to do this now. And there's an emotional attachment to the driver behind that decision. I love that. And I also love the longevity of the relationship that, like, clearly you were there during a tumultuous time for them. And it, to me, it's always easier when you have a team, especially of experts that aren't emotionally involved in the decisions, but you can see it as, hey, this piece of the puzzle looks like it fits really well over here. Whereas when we're emotionally involved in something, it's like, I don't want to move it over there. It's like, but it fit really well.
Yeah,
So,
it's certain the pandemic was certainly a curveball I don't think anyone really saw coming.
no.
And but yeah, they were able to pivot. Props to them to create a much more durable business. Uh, they gave us the fortunate position of continuing to be their trusted advisor through that process, and ultimately got it done for them, which was great.
Nice. I love it. Well, I know that there are listeners here that are going to want more from you. So how did they start their journey with you?
Absolutely. Yeah, I think the easiest thing is just checking out our website, ButcherJoseph.com. We have a lot of resources on there, whether you're a business owner looking to evaluate a sale transaction, what that means, what an ESOP transaction is, and how that compares to other sale alternatives. We also have resources for what our initial conversation looks like. So what we refer to as our feasibility analysis. We have some examples out there. And our contact information, including myself, is on the site. So feel free to drop us a note. We're always happy to chat through your situation and give our thoughts.
Nice. I love it. We will, of course, have all of Tristan's links in the show notes. So go ahead and scroll down, open up in a new browser because you know we're not done yet. Now, at this point, Tristan, I usually ask somebody, at what point in life did you know you were special kind of crazy enough to think that you could become an entrepreneur? But my understanding is you're actually working with your company, right? So when it comes to entrepreneurs becoming entrepreneurs, how do you feel about it? How do you see that? You know, to me, it's a huge move and a brave move to to take on that entrepreneurial leap. But how do you vision that?
Well, I have I'm answering this from the sideline as an advisor to
Exactly.
entrepreneurs. So I don't know if it's fair for me
Don't
to
do
answer
it. No, I'm
yeah,
kidding. I'm kidding.
to answer that question. But for
No.
the founders that we work with, incredibly brave. You hear the stories of what it took to start their business and get it to be successful. I mean, it took everything, and props to them. It takes a lot of risk, and with the risk comes reward too. And each business has their own story of how they got to where it is today. it's partially why I love what I do, and that I get to talk to a bunch of different founders and hear their stories and help them with usually the final culmination of that story, and that is unlocking the value and selling the business that they had built today. But yeah, God bless them. They're special creatures.
Yes, we are. We're a special kind of crazy. You have been absolutely fantastic. Any last words for our peeps?
No, just thank you for listening today. I hope you guys learned something, and here to be a resource if there are ever any questions.
Nice. Love it. Well, thank you so much for your time. I appreciate it, and I know how valuable it is.
Thank you, Michelle.
Awesome. Peeps, thank you for being here with us today. Be sure to subscribe to the show and share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.